Hello, welcome to European Open Briefing for Friday, February the 15th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So after all that trade optimism, we did see a sharp deterioration in risk sentiment yesterday, and that risk-off is carrying through today. We saw Asian stocks falling sharply. We also had modest losses overnight on Wall Street, and now we're seeing a negative start to trading in Europe. The dollar is mixed. It fell sharply against the Japanese yen. We saw some very poor retail sales numbers out of the US, but the dollar index, which measures the dollar's broader value, is back above the 97 level as other currencies continue to face downside pressure. Either through their own economic issues or through as a result of the risk of sentiment. So the Aussie, the Kiwi, and the Loonie are all down against their US counterparts. We also did see some weaker than expected Chinese producer prices out earlier today, so that is also weighing on market sentiment as it points to weak factory demand. So that's again raising concerns about the Chinese economy. The Loonie hit a 3-week low yesterday. We saw some poor manufacturing sales numbers out of Canada, and oil prices are somewhat, we're seeing some more moderate gains this morning, up by 0.15%, so that's not helping the Loonie either. And the pound came under sharp selling pressure yesterday as well, dropping below the 1.28 level as Theresa May suffered another defeat in Parliament. So focusing now on the US dollar, we can see the dollar index holding fairly firm. Dollar yen slipping below its exponential moving average here in the 4-hour chart. So yesterday's retail sales numbers showed a 1.8% slump in sales in December, missing forecasts of 0.1% increase. So that's the biggest drop since 2009 at the height of the financial crisis. So that has pared back expectations of Fed, the rate hikes, which had already fallen sharply after the January meeting by the Fed, and we had the Fed Governor Lyle Brainard adding to those dovish expectations, signaling that the Fed's balance sheet reduction could end possibly later this year. There's mixed language coming from the trade talks. Initially, yesterday, there were reports saying that the US and China were far apart on structural reforms. Talks were described as like pulling teeth, so that contributed to the risk or triggered the risk of sentiment rather. And then this morning we're seeing somewhat more positive remarks. Talks have now concluded, and apparently the two sides were satisfied with the outcome. US officials will be meeting President Xi later today, and there's reports saying that the US could consider dropping the 10% tariffs currently on about 200 billion worth of Chinese imports as the talks go on. So although maybe not quite the progress markets were expecting, that's still nevertheless somewhat more positive than the initial reports we saw yesterday. And the government shutdown also appears to have been averted, but President Trump has raised some political uncertainty by saying he will declare national emergency to fund the border wall, and this though could face legal challenge from Congress and most likely the Democrats. Let's now take a quick look at sterling. We can see there were a few spikes yesterday following comments from Bank of England policy member Gergen Lich. He said that rate cut or pause is more likely than a hike in a no-deal scenario. But then he also reinforced the bank's current view that rate increases are needed if there is a smooth Brexit. So we saw sterling spiking higher from earlier falls after those comments. But then we heard that the Tory Brexiteers will abstain in a vote in Parliament, and they did do that, and we saw sterling falling sharply, slipping below the 1.27 level. The vote was mainly just to reaffirm Theresa May's plan to continue negotiating with the EU before coming back with a meaningful vote to Parliament at the end of February. But it still nevertheless weakens her negotiating position with the EU, as she was arguing that if the EU do agree to make changes to the backstop, she would be able to get that deal through Parliament, and now that is being cast into question, and we can see euro pound, despite the pound's weakness, euro pound falling this morning, as the euro is also struggling due to weak eurozone data. In the more immediate term, we're going to have UK retail sales numbers coming up very shortly at 09:30 GMT, and there's going to be some US data later on to watch out for. So that's it from me. Thank you very much for watching, and have a great day.